Hey guys, what's up? Hitori FX here. Welcome to the 25th episode of the weekly market outlook with TradeX Prop. Now, in this episode, I will be covering the dollar index, gold, GBPJPY, the S&P 500, the Russel index, as well as WTI crude oil. If you have any other asset classes you'd like me to cover, just leave a comment down below or join our Discord channel where you can talk to me and the TradeX Prop team. Okay, so a bit of an update is I decided to include a bit more asset classes in the outlook, so I can maybe give a bit more tips on a wider range of markets, but that does mean that I won't be able to stick with the monthly and the weekly for the outlook, because if I were to include them as well for so many different asset classes, the outlook would probably take like an hour and a half, and I don't want to do that for everyone else, including myself. It's a bit of a drag, if you will. So I decided to just stick with the daily, and I'll see how things play out from there. Okay, because I did receive some feedback that the monthly and the weekly might be a bit too far out, seeing as how I'm just giving an outlook for the week anyway. Since I do an update, every single week, I think it would also be more beneficial for people that watch the video, like yourselves, that I just stick with a more shorter term form of analysis. So with that being said, let me get straight into the first pair, which is the dollar index. So just a bit on the technical side of things, we have seen a large rally from the bottom here, which is all the way back in actually September. We bottomed up around here, and we saw a large push move higher, which was about 3.71% in a span of 20 days, around 3,700 ticks. Alright, so where we currently are, we are not going to be looking to go against this, I'd say, a large trend. It's pretty foolish to be selling really quickly when something's in such a big trend, which you also see in the next few asset classes. So what I'm actually looking to be doing is I'm going to be looking for price to pull back into certain areas, maybe right here, and continue to be a buyer of the dollar index. Okay, so looking to be a buyer because we've seen such a big move, but this is a bit extensive. It's a bit overextended for now, so any pullbacks would be great. We could just break past this level and come back down into the range of 103 and 101 within this range right here, and I'll see if the market forms support around any of the structure points that we have right here. The only issue is that at the moment, these aren't really clean areas of support. We did come up, stagnate a bit, push higher, stagnate a bit, push higher, but in a sense it's not really good support for me, because it's not really a point where price pushed higher. We formed a strong bearish level like this, and then we continue to push higher. We didn't see that. We saw price stagnate, and these are potential areas that price could react off of, but I would just be waiting for price to pull back into some level of discount, you could say, or just give a strong enough pullback before forming market structure in which I can look for potential longs in form of continuations, expecting the dollar to go higher. Okay, so a bit of advice is, if we do continue to see such strong momentum continue upwards, and we do see a break above 103 right here, we could potentially see a continued drive higher into at least 104, and potentially higher into like the 105s right up here, but really just 104.569 for now. Don't expect too much and predict too much, just based solely off of technicals. On the options that we do pull back and we break beneath this low and we break beneath this level, you could potentially see really short-term sell ideas, but keep in mind of the overall long-term momentum is still to the upside, right? It's been to the upside for 20 days, and it's really scary to be going against that. So just keep that in mind for your long opportunities. And any dips could be short-term sells, but really the long-term idea is just for price to dip lower, form some support, break resistance, and then continue higher from there. Okay, so that is what I'm expecting for next week. But before that, let me just go into a bit of the fundamentals. I won't cover too much, but just a bit basic things is that, as of recent, we do know that the elections are coming up. They're on the first week of November, so November 4th is going to be a very pivotal date. And I think regardless of who wins the election, it's going to be pulling the US into a state of large uncertainty, right? So because regardless of who wins or who loses, I think that there's going to be a substantial increase in government spending, which could lead to increased inflation. Of course, this is just my own speculation. It's kind of like a ballpark guess. But like Trump and Kamala, both of them are pretty much a big question mark, and I won't be here saying who I think is going to win or who I want to win. But regardless of who I think is going to win, we will see heightened volatility coming into the elections. Although as of recent there has been some decrease in interest rates, we are still seeing a large push move higher. All right, so keeping this in mind, what drives interest rates is also debt. Okay, so the US government actually has a really high level of debt, which creates upward pressures on these interest rates. And if interest rates rise, the dollar index is going to be continuing to go higher because people are not going to be putting money into the dollar for that interest rate. All right, so people like traders and investors, we do have to be aware that attractive yields on government bonds has to be maintained to be attractive and essential actually for lenders. So really keep an eye on the election if it comes down to it, and also keep in mind on the interest rates. Okay, so just a bit about that. You can go on Google what the current rates are, what it has been for the past few decades. When we come near to election, I won't go through that right here because I think it's a bit of too much information pretty much. But regardless, technicals, they still kind of are in some way the leading indicator. So don't be looking to take any long-term short ideas trying to catch the top. Always look at these dips as potential pullbacks for price to go higher until we start to form some range and we break to the downside with commitment and conviction that you can say, oh my god, we're forming a lot more new recent market structure that is signaling to us that we're going to go lower. As of now, that hasn't happened, so keep that off your books for now if you don't want to be caught in the tops basically. So looking at the econ calendar, here we have no news on Monday to Wednesday, but on Thursday we do have employment claims as well as the PMI, the Purchasing Managers Index, around 8:30 p.m. Malaysia local time, and no news on Friday. So keep this in mind. We are likely to see a rangy London session before these news releases. Monday and Wednesday should be fine, including Thursday. We should be trading the markets normally. Okay, so that is the dollar index. Let me move to the next pair, which is gold. All right, so coming up here in gold, last week we actually did break the all-time highs, and we have reached the $2.7 thousand dollar mark, which is crazy. I know analysts have been thinking that we might reach somewhere around 2433 at the end of the year, and we reached that like middle of the year, and we just kept going. So it just proves that gold is really like a wild bullet. It's very, very unconfirmed on what things might happen. But coming back into gold, bringing you through the technicals a bit, we saw this extended range higher. We broke to this high with large conviction, and any shorts are going to be deemed high risk. Last week, I actually did take some shorts, trying to cap on really short-term intraday pullbacks before that move higher, and they were done with control risk, but I took the L's. So that just shows to you that shorting in such a bull market and on such an asset like gold is really trying to prevent a bullet train. All right. But looking at what I'm seeing for next week on the daily right here, we are just closing really strong bullish. There's not much to say about it. We are closing really strong bullish, and this commitment to the upside is going to be very scary because it's probably too strong to short right now. It's too strong. So the same thing with the DXY applies, where I am expecting pullbacks lower into potential areas of support to look for price to continue breaking higher, right? So you definitely can take short-term sell ideas into supports and take them off really quickly, but always pay yourself and make sure you take risk off the table as soon as you can, especially when we're trading near all-time highs. It's very, very difficult to manage risk because there's no structure point looking left to base your stop loss off. If you took a sell right here, it will have to be based off of the numbers on the right. There's no structure on the left to base your ideas off of. So at least when we start to see a pullback and then you're shorting right here, you have a new structure point to kind of put your stop loss at. If not, you're pretty much just blindly putting it at around these, like the 40-50 mark, and just hoping price doesn't go higher than that. So short ideas are valid, but I would like for me to see a bearish candle, a strong bearish candle form, and then we break that low and then we continue lower. That's a good signal for me to look for very short-term sell ideas, right? But if we do pull back, an areas I'm looking to buy in discounted pricing to pick up buys is around 2672 on the Oenda data feed right here. If we do pull back down here, I want to see a support form and then this high to break before looking to continue taking longs. But if we do break beneath this range right here, there really isn't any much strong structure nearby to base ideas off of other than 2607. So technically, if you do break beneath here, you do have a big range of around 2% or otherwise 220 points, and right down to this slight structure right here is around 220 points, right? So if you want to short, be aware of this stagnant level in price, but ultimately be aware of this level right here at around 2607. If you do break that, then all the way down into 2559 might be the way to look at things. All right, but this is far-fetched. We only have 5 candlesticks in a week, so do keep track of that. So fundamentally, I'm still bullish on gold because of the potential war escalation between Iran and Israel, as well as the US election coming up, where when people or the markets are thrown into a state of uncertainty, people tend to gravitate towards safe havens like gold. Gold has always been a really good place for people to put their money in, regardless of what time period it is, but especially so during times of economic uncertainty, right? So still bullish on gold as of now, both technically and fundamentally. Any short-term sells have to be short-term. All right, but we'll update this sentiment as we see the hopefully not a war play out. War is never a good thing for either side, for anyone really. And after the election is the posts are coming out. All right, so that is what I'm seeing on gold. Now let's take a look at the next pair, which is GBPJPY. So this is a pair I don't think I've ever covered on the outlook before, but the yen is a very interesting currency, and pound is one of the major currencies of the world. So I just figured I mash them both together, and then we'll see how it performs from there. So this is the daily chart on the ONA data feed for pound yen. Really, we're caught within this big range of around 3%, around 548 points, and stuck between the price point of 195 and 190. There's not much of the daily that we can see, quite figuratively, even off of the 4-hour, and the 1-hour is still, it's still a big mess right here. There's not much structure that we can see things. It's just ranging. So this is a breakout that has occurred for around almost a month, 25 days, and it seems like we're coming into something of like a bullish flag pattern. I don't trade patterns, but we're bottoming up against this area of resistance up here, making higher highs and higher lows. So the longer the breakout, quite frankly, the longer the range, the larger the breakout is what something most people say, and that's something I do agree with as well from my own experience. So either we break past this level to continue higher into 198.104, we have around a 280 point range to go with. I do think that if we do break above here, it's going to be a very sharp and quick move up to this range. I'm not sure if there will be any opportunities if you do wait for that daily closure, but if we do break below here and we just continue going in that range, we could see a retest of 190. Only issue is that this is a big area of support. We have one here, we have one here. There's no clean traffic for you to take sales down, even if we do close with a large bearish candle right here. So I argue that this is a very no trade range for me. I'll only be looking for trades if we break above 195 up into 198, and then we'll see if we can reach some of these areas on top right here at around 200. But if we don't break above there, and instead we come down lower to retest there, and then we break below here, I'll be looking to take sales in the minimum 186.241, which is around this area of structure. Price came down, bottomed around here, broke it with large momentum in this candlestick, and found support in this wick to go higher. So this is for me at least, it's a valid area of resistance. Breaks become support. So that is it for pound yen. Just waiting to see which one happens next week, and I'll keep you guys updated in the next outlook. But I don't trade like bull flag patterns like this. Okay, this is like a ascending triangle. I don't trade those, just so you know. I just trade off of pure market structure and price action. Okay, so that is it for GBPJPY. Moving on, we have the S&P 500. Let me just go here, just enlarge this. So this is the S&P 500 index on the daily chart, and yep, we've been super bullish throughout the year. I think this has been one of the best performing years in the past decade, really, or even the past few decades. It's been one of the best rallies we've seen. So let's just say many investors have not outperformed the S&P 500 this year, because the S&P 500 is pretty much the benchmark for what they call the market. So when someone says outperform the markets, they pretty much mean the S&P 500. So as of now, looking at this big bullish trend, I am still bullish technically on the S&P 500. Any dips lower is going to be an area for me to look for potential longs. All right, so we have a resistance around around 5877, and a minor support around 5790. So if we do break above, we can keep going upwards. If we do break beneath, 5790, we could see potential shorts down into 5700 right here. It is around a 850 tick move, around like 1.5%. So we could see moves like this happen, and you can take short-term shorts, or you could wait for the longs to set up once price action has shown you, confirmation that it wants to break higher. Okay, if we do break beneath this cluster of wicks at around 5703, you could potentially see shorts down into 5634. But do keep in mind, we do have this level right around here as well. They're very close to this wick, so we could come down, find support to go higher. But as of now, the only clear thing, which I only base things off of clear levels instead of anticipating levels, I want to see price come down right to 5634. Okay, but as of now, it looks like a staircase. Oh no, it looks like a staircase coming up right here. Looks like a staircase, so I wouldn't be looking to sell. Okay, I wouldn't be looking to sell. Long term, it's still a pullback pretty much. All right, so that is the S&P 500. Let me just get into a bit of the fundamentals. Is that I want to compare this with the Russell, right? So for those that don't know, Russell is an interesting one. Okay, so the Russell is a benchmark for small cap stocks in the US, right? It tends to reflect the performance of emerging companies that pretty much aren't that heavily weighted compared to things like the major indices like the S&P or even the Nasdaq. So I want to bring this pair up because the Russell index, when it's rising at least, there's normally a corresponding increase in general market optimism, right? If the Russell is up, there's pretty much like a 80% chance that the overall market is having a good day, because if the people have money to flow into the smaller cap stocks, you're gonna bet that they're also going to be putting money into the like steadier companies, right? Because kind of like the Russell here is like the underdog, right? Because the companies listed on here, they aren't large established companies that are a bit more safer. Like instead, they are a bit more riskier up and coming companies. So if the Russell is performing, the overall stock market is pretty much also performing. So we have seen the Russell gain large momentum and push past the 2284 mark of this long-term area of resistance right here. We have resisted this for around almost 100 days right here, and then we broke past it with conviction. 2291 right here, and we are currently coming back to retest it. So if we could continue to blast higher, let me just go to the left. Some of the key areas I'd be kind of keen to be looking at is this area, this area right here, around 2235, 2233, 2333. So tongue twister right there. But I'll be looking for potential longs up into the area. I'm not sure why that line disappeared. I think it didn't save. But this is around a 2% gain, around 457 ticks. So I'll be expecting a move like that if we were to respect this area of resistance around 2284. Oh, I moved the wrong screen. But if we do break beneath it, this could be a potential faker right here for price to continue lower back into the range, and really there really isn't like a clear level of structure around any of these price points right here. So I don't know which level is gonna form a support at, but I'll be looking for price to come down here anyway, and then form that support to continue higher. Okay, so I'll be waiting to see how price reacts, because this is not a clean traffic to trade at all, even though we do have something that looks akin to clean traffic. But look at these wick rejections. I'm pretty sure they came out for something to the left. Okay, but even then, you know, you should still be bullish on the Russel right here. All right, so that is pretty much it for the Russell. Let me get into the final pair that we have today, which is WTI crude oil right here. So oil is also supposedly bullish if you look it based on the fundamentals, because like I said, the Iran-Israel conflict is likely going to cause a disruption in the supply chain, which is going to cause supply to decrease because of just how hard it is to get oil to everyone else when the countries that are exporting oil is in conflict, like Iran and Israel. It's going to be tough on the supply. But looking at just the technicals right here, what did we see recently? Well, we saw price do a big move upwards, and then now we're coming back down almost to clean and cover up the entire bullish range right here. So lots of bearish candles in the previous week of trading, and we did see price stagnate around here, and here is where we currently are. So looking at nearby levels, this isn't really a clean area of resistance for me, because price, I mean, it is technically by definition an area of resistance, but it's not like this was a really big and convincing bullish day as well. It was pretty much a doji, right? This is the hammer candlestick. So I will still be eyeing this level, and if we do break above it, I would like price to come back to retest it to call this support before looking to take longs up into around 7.5 right here per barrel. But if we do continue lower to retest this support right here to the left at 68, we could see a correction up into this area depending on how we trade. But this, you know, kind of has pretty much covered the entire range already. But if we do find support around here and come back up, assuming there's clean traffic here, I would be eyeing this level for a potential break. All right, so longs around here are valid depending if there's clean traffic or not, and breaks above here, I would like for us to retest this to continue higher. Okay, if we do break beneath 68, then I will be looking for this wick fill around $66, which is around 2%, and this is around a 2% move and around 1,000 plus ticks. Okay, and anything beneath here, if we do test here, you know, if it does taps into 65, you could see a strong support form, and then we could continue higher. Okay, I won't cover too much on the sentiment of oil, but looking at the trend, it's just been a, you know, really big downward trend. I don't use trend lines, as you can see. I'm not really experienced with it, but we are in a really big downtrend. All right, so that's pretty much it for this week's outlook. I managed to finish this in time, back compared to back when I was just covering DXY, gold, and the S&P 500. I think I've added 2 more pairs. I might add a bit more, but we will see how the outlooks perform. Okay, yeah, that's it. I will let you guys go and give you back your time. I'll catch you guys in the next one. See ya. Bye bye.